Some great news out of the US over the weekend, courtesy of the US Labor Department. It appears that US job growth has exceeded all analysts' expectations, growing by nearly 250,000 over the month of January. This has reduced the US unemployment rate to about 8.3%, the lowest it's been in nearly 3 years. This, together with strong industrial data over the last month, gives credence to the view that the US economy is actually in recovery mode. However, the news is not all good. Storm clouds again in Europe, courtesy of the Greeks. Greek leaders again have failed to agree on spending cuts which are required to underpin any further bailout, and this is required for their bond repayment in March. The spending cuts are actually significant, about 1.5% of GDP, so it's no surprise that there is a bit of a problem there. Looking at what this had on the markets, looking at currency markets first, the US is trading at about 83.3 cents against the Kiwi. We were relatively flat against most of the other currencies. Looking at the equity markets, the Dow initially surged on that Labor Department information. However, those Greek storm clouds made it drop roughly 50 points this morning. The New Zealand Stock Exchange, of course, was closed yesterday, it being Waitangi Day, and the ASX 200 was up nearly 50 points. As dairy farmers will be aware, milk prices again fell on the global dairy trade platform auction last week. This is hardly surprising given the surfeit of supply. Not only is production up in New Zealand, but production is also up in both the US and Australia. However, exports continue to keep pace with that increase in supply, and this is despite increased competition from the European Union, where the weakness in the euro means that their product is actually comparatively cheaper in the Asian market. So how does this affect the picture going forward? Well, income is effectively a product of price times supply. We've seen price slip back, but of course it's been matched by supply. So as long as the supply keeps going, we would hope to see that farm gate incomes continue on a relatively constant course.